Hi, welcome to the Market Alert for Friday, the 18th of September 2015. So the Fed strikes again, or in this case it doesn't, and once again we have a delay in increasing interest rates, and there's no surprise really. So even though Mrs. Yellen was painted into a corner, the committee decided not to raise rates, and one even said that we should go to negative rates. So it just shows that they haven't got a clue about what's really going on in the economy. I put myself through the torture of watching the press conference after, and I have to say I've never been so bored in all my life. I've never heard such utter nonsense either. Yellen kept going on about how strong the labour force was and the inflation target and everything else, and then when questioned about China it was just dismissed. And yet this, what we see in the charts here, was blamed on China. And isn't it convenient how when there is the prospect of a Fed rate increase a few weeks later that the market's brought back, and even though in China, when you look at the chart, and we've been talking about this in the Market Alert, if we just go to the monthly chart, you can see still dipping below that 3,000 level. There's still been very high volume days, high percentage drop days as well, and yet the Fed has, sorry, not the Fed, the market's ignored it, and it's been brought back up. Well, now the Fed have lost confidence and all credibility, in my opinion, and yesterday's price action proves that, which we'll just look at in just a moment. That being the case, I would expect anything negative now to happen in China, i.e. the break of that 3,000 level. You will see this market accelerate. What was also glaringly obvious to me, and no doubt a lot of other people as well, that missing from Yellen's report is the amount of debt. Nothing about how they're going to pay it off. And personally, and also she hinted at this as well when asked about if the economy took a nosedive, would they have any tools available? She didn't say negative interest rates, but she implied that the Fed had further tools, which means negative interest rates and QE4. And to be perfectly honest with you, that's more of a likely scenario than them actually ever raising rates, because the economy hasn't recovered. There's no doubts about that. I don't care what they actually pump out. I mean, if you have a look at this here, you've got, this just goes to show how bad things are. Student loans since Obama came in have skyrocketed, food stamps, federal debt, money printing, health costs, labour force participation in real terms has actually collapsed, workers' share of economy the same, median family income the same, and home ownership. And they're talking about raising rates. And that's because they want to normalise the market. They wanted to make it look as if it's normal prior to, as they call it now, the Great Recession, i.e. 2008. It's not going to happen. It's with the Fed is still using emergency rates. These rates were made in December 08 or set in 2008, and they've been like that ever since. So we're still on emergency rates, and there's been no recovery in the economy. And as you saw from the video I did the other week, they don't even talk about the backdrop of the market or anything else. They just talk academic figures. They're still using a template that was used prior to 2008 about inflation and labour market participation and all this other nonsense. It is complete and utter nonsense, because everything changed when the banks collapsed in 2008 and the Fed bailed them out. They won't even tell us who they bailed out and how much they bailed them out for. So the whole thing is an absolute farce and a joke, frankly. And yesterday we saw the market's loss of confidence in the Fed. The market, even on the reaction when it came out, you can see the market trade up and down 100-point range there. Then the market moved higher, ran out of steam, low volume, and then it just came all the way back and below for the remainder of the session for 250 points range there. So it goes to show this, I'm telling you, this is very important. This goes to show that the Fed's credibility has vanished completely. Here we've got the market bouncing up on the overnight and starting to come to the downside. All we need now is another big down day in China and any other sort of geopolitical event that could happen with Syria. We've got the immigration problem and all sorts. There's all sorts of tinder boxes out there that could ignite and set this off. But one thing's for sure, without QE, without negative interest rates, this party is over to the upside. There is nothing to move this market. This market has gone up on QE money, 8 trillion of it, and the party is over. They're frightened of putting interest rates up because they know that it will prick the bond market and it's downhill from there. So I'm looking for shorts in this market. There are going to be days when the market rallies if we get strong down days. Again, I must emphasize that it's not short all the way. There will be days where the market moves higher, but it's the volatility we want back. We want to see what we've had for the last few weeks until this Fed nonsense got in the way, where we had nice ranging volatility, and it seems like that's returned so far on the Asian market there. So there's nothing else to see in this. It's more of a Fed report or no report. So again, my impression and analysis says it's over. We marked up yesterday to the 50-bar average. We put in the 17,000. It didn't quite get there. I was sitting watching it, but it didn't quite make it. And there you can see it was up on fresh air. The market's gone up on fresh air all week. There's no buying at all in this market. It's the downside for this market and all other stock markets and other asset bubble markets as well. So a quick look at a few other things. We've got the Chinese market up this morning, 3,106. They're doing their damnedest to keep this one up as well. Central bank intervention all the time. As the market closed, or headed towards the close last night, the market sold off once again, but he's holding that 3,000 level, and this is a very important level for this market at this time. And in the implied volatility, 1826, and that's just below, just high, slightly higher than yesterday, but this is come back sufficiently now for the plenty of potential for the downside. Right, that's it from me. I will see you in tomorrow's market alert. Actually, just other thoughts. Have we got any news today to move the markets? No. We've just got Haldane speaking, MPC member, that's for the UK. Don't expect the interest rates to move in the UK either. Carney has never delivered on any promise that he's made. So again, don't even worry about that one either, frankly. It just goes to show that they're terrified of actually increasing interest rates. Right, that's it. I promise that's it for today. I will speak to you either over the weekend or on Monday morning. Have a good one.